Hi guys, welcome back to Reserved Investments on YouTube. So I have to put a disclaimer on this video just to make sure that you guys are aware. We're going to go into a little bit of investment and economic terms in this video because we're going to be discussing opportunity cost. Not just opportunity cost in the greater antiques and collectibles trade, but also opportunity cost in the economic and financial markets. That being said, while I am educated in business and finance, I am not your financial advisor. So I don't know your particular situation. I don't know your financial situation. So please, just understand that this video is being produced pretty much for entertainment purposes, and you shouldn't apply it to your particular situation without talking to somebody who is versed in finance and or the understanding of the greater financial markets should you choose to invest in them, okay? With that being said, we can start talking about what an opportunity cost is. Basic definition of an opportunity cost is the loss of potential gain from other alternatives when one alternative is chosen. So let me use this as an example. Let's say that you want to become a sophisticated investor in the greater antiques and collectibles trade. And you have $10,000 sitting, okay? And you want to take that $10,000 and you want to put it into items that are going to grow long-term over the next 5, 10, 15, 20 years. So if you're going to put that money to work in the greater antiques and collectibles trade, you have a multitude of choices. Not only that, though, you also have to understand that when you're buying an item in the greater antiques and collectibles trade to quote-unquote invest in over the long term, you also have to compare what you think that item is going to do financially compared to the greater economy and stock market as a whole. Here's a fun statistic for you. Since 1871 all the way up through 2015, the annualized real return, if you were to invest overall just in the greater stock market, okay? So if you would call up Vanguard and you would get something the equivalent of total stock market index fund, okay? Which is a low-cost mutual fund that pretty much mirrors the returns of the Dow Jones Industrial Average, okay? If there was such a thing available back in 1871, because Vanguard's only been around since the 1970s. Index funds are fairly new. They came about in the last really 40 to 50 years. That said, if you were to invest aggregate across the board in the greater stock market, okay, from 1871 just up to 2015, the average annualized return adjusted for inflation is 6.86% per year. That means you would have gotten close to 7% on your money year after year. Now here's the kicker. That's an average return. That means if the market drops 40 or 45% like it did in 2008 and 2009, you don't go and sell all your assets. That means you are holding for the long term. I don't care what anybody says, okay? I am with Warren Buffett on this. Buying stocks, blue chip stocks especially, high profile stocks, mutual funds, all that stuff is bought for the long term. You guys out there that are looking to flip penny stocks, do stupid things like flip houses, and other stupid get-rich-quick schemes, you're not building wealth for the long term, and you don't know how to build wealth for the long term. That's why you're engaging in that speculative behavior. It's just like people who enter the antiques and collectibles trade. You have the people who are very studious, patient, logical, who know how to build a portfolio of antiques and collectibles over the long term. Then you have people coming into the trade, and they're filling up bookshelves like this with video games, toys, comic books. Half the time they don't even know what the heck they're buying. They're just going out looking for the latest speculative item that they can put in their shelf and say, hey, I got that, I can cross that off. Hope it goes up in value, with no research being applied to understanding the markets, excuse me, that they're investing in overall. That is a shame, okay? You have to understand, I'm going to use this example again. Let's say that you have $10,000 and you want to come into the antiques and collectibles marketplace. Well, first of all, I'm going to ask you this. Are you assured that with that $10,000, you can at least beat an annualized real return, adjusted for inflation, at 6.86% per year before you even touch anything in the greater antiques and collectibles trade? Now, I know what you're going to say. Sean, I want to diversify my assets. If you already have a six-figure portfolio or you're already all set and you go, you know what, I understand stocks, I understand bonds, I understand mutual funds, I understand ETFs. I want to take $10,000 of my money and I want to diversify into antiques and collectibles. I have my college education paid for. I have my house pretty much underway or paid for. I have my car paid for. I have no car payments, no credit card debts. Now you're ready. If you want to diversify, you can go into antiques and collectibles, gold, silver, which I really don't recommend unless if you're buying coins for more of their collectible value, okay? Cryptocurrency, whatever you want to get into, now you're ready to enter that realm. But one thing that I always have to laugh, a lot of speculators, they read my articles that I write for Antiques and Auction News. I'm going to give you an example in a minute here. And they'll tear me up and they'll be like, well, that Sean was wrong. I bought 10 sealed copies of this video game that were going for 20 to 30 bucks and I managed to sell all of them for $35. My gains were astounding. Well, if you did that over 2 or 3 years, here's the problem. You still didn't beat the 6.86% on average that you would have had per year if you put the money in the stock market. When you compare opportunity costs, and this is what speculators fail at miserably, you have to look at greater investment opportunities, not only within antiques and collectibles, but also in the greater financial markets as well. Now, there's a reason why you may want to own stocks that we call growth stocks, okay? If you go to a financial advisor, he's going to probably put you in a mix of growth versus value stocks, okay? Well, growth stocks are stocks like, let me name some, Tesla, Facebook, even Apple can really be considered a growth stock. They're stocks that pay a very low dividend, but they're ripe for capital appreciation, meaning the stock price will hopefully over time go up in value because instead of the company paying out a dividend to their shareholders, or a large dividend I should say, they're reinvesting those dividends to ensure that the company grows significantly, which increases the chances that the value of the stock is going to grow, if I'm saying that correctly, okay? You have to look at other assets, not only in the antiques and collectibles trade, but also out there in the financial markets, even real estate, okay? If you have all your debts in order and pretty much your house payment, you're good to make that payment, you can invest in a rental property. The problem is, I don't advise too many people who are living on either 1 or 2 incomes with very few other assets to enter the rental market, meaning go out and buy a second property for the use of additional rental income, because you really have to have some experience. You have to understand how to read financial statements. You have to understand how to analyze cash flow. So if you are going to take on a second mortgage, which really that is, and the mortgage is $1,000 a month, and after all expenses, you're only getting $800 or $900 in because you miscalculated, every month you're going to have to pull out of your pocket $100 or so to cover either the expenses or the cost of mortgage to keep that house going while your tenant pays you rent that may not be enough to meet the upkeep of that particular property, if you understand. There's a lot of new investors that came into the real estate market during 2008, 2009, and before that, because that's what caused the crash, really. It was the subprime real estate market. But they didn't know what they were doing, and they thought real estate prices would continue to go up. Again, I said this before, no asset class. I don't care if it's in the financial markets. I don't care if it's in the real estate markets. I don't care if it's in the antiques and collectibles trade. No asset class will ever go up indefinitely, okay? It is impossible. It cannot happen. The reason why stocks, like if you go into an index fund, like a Vanguard Total Stock Index Fund or a S&P 500 Index Fund offered by Vanguard or T. Rowe Price or Fidelity, you pick whatever fund company you want to go with. That said, you're investing in the greater economy and the hope that the gross domestic product of the United States and or the world, wherever markets you have the basket of securities that is indexed, will continue to go up year after year. If we hit a recession, what that means, that's 2 consecutive quarters of contracted growth in the GDP. That's all that means. That's all a recession is. Most people don't understand that. All is what it means is you can go back 2 quarters, and if you see that there is a negative return on growth in the greater economy, that's all a recession is. It just depends how long it lasts before the overall economy recovers and turns to a positive return going forward. Okay? If there's any confusion on that, please leave a comment in the comment section. I know sometimes when I talk about this stuff, I feel sometimes I go very fast, and I know some of my viewers who may not be expecting a video of this nature on opportunity costs, where I'm also talking about the financial markets as well as the antiques and collectibles trade, may have questions. So I get that. If you need me to do a follow-up, I would rather you put something in the comments rather than say, this video sucks and shut the video off, okay? Because even if you need to watch this video twice, there's a lot of valuable information that I'm talking about right now, really. So going back to my example in the greater antiques and collectibles trade, let's say that you have $10,000, you have everything taken care of, meaning you have a stock portfolio, bond portfolio, you got everything going, and you want to take $10,000 and you want to plunk it down in the antiques and collectibles trade. This is what you got to look at. Let's say that you're into, I'm going to use several examples here. Let's say some of your interests are vintage video games, comic books, Magic the Gathering cards, and also like coins and currency. Okay, and I'm basically naming stuff that I'm interested in, and I know a lot of my viewers are interested in the same stuff that I am, because as you can see from the table here and the stuff behind me and the other videos I've done, obviously we have some things in common in that regard, otherwise you wouldn't be watching this channel. Okay, so what you have to do then, you have to analyze the Magic the Gathering market, the comic book marketplace, the vintage video game marketplace, and also the coins and currency marketplace. Okay, if you're looking to invest in those items. What I would recommend, if it was me, and obviously judging by what you see in front of you, behind you, and talked about in some of the other videos that I've done, and also my articles for Antiques and Auction News, you can pretty much see that I cross collect and or invest. That's not to say, guys, and I want to put this out there, that doesn't mean just because, say, I have a VGA 95 limited edition Super Mario All-Stars for the Nintendo Wii, graded like this, that I consider this a good investment, okay? There are certain items that I buy and have that I just collect and or speculate on. The items in what I consider my hardcore antique collectible investment portfolio, if you will, more or less, and I hate to say this, consist of coins, currency, historical documents, artwork, first edition books, like a Great Gatsby first edition, which I do own, ironically. I have it in a safety deposit box. Items that I consider really historic, where even if going along here 10, 20 years, I may only get, honestly, on average, a 2 to 3% return on some of these items that I'm holding, but I know they're going to at least hold value, and going forward, I know that my nieces, my nephews, their kids, and their kids will still covet these items. For instance, I don't think there'll ever come a time in America where The Great Gatsby isn't read in at least high school, if not college. Do you see what I'm saying? That's an example of a book that has long-lasting appeal, in my opinion. That's not to say you should run out and spend 10, 20, 30 grand on a first edition Great Gatsby if you have no interest in it. But what I'm saying is I'm trying to compare that to some of the other items that you can be putting your money into. And if you're diversifying for asset protection, that's an item that I don't think will ever fall out of flavor anytime soon due to the classic and historic nature of a book like that. It's just like you can substitute that with Adam Smith, Wealth of Nations. If you're into that sort of thing. If you have an early edition, I don't want to say first edition because that can get really hard to find and pricey. But if you have an earlier edition of Adam Smith, The Wealth of Nations, that's something that has the potential to at least go up in value over the years, if not hold value. That's not to say you may not encounter years where it kind of falls a little bit out of flavor, where people aren't buying an item like that. So you'll notice if you pay like 20 grand for a rare book, okay, or even $10,000, it may very well drop to $8,000 or $9,000. But usually what happens is books are somewhat cyclical, especially if they're hardcore classic books like Great Gatsby, Ethan Frome, Great Expectations, Wealth of Nations, Dante's Inferno. Items of that nature are really iconic. So sometimes they'll ebb and flow, but if you hold them for 10, 20, 30 years, you will most likely eke out some type of gain, even if it isn't as high as the overall stock market, okay? If you're diversifying into other asset classes, you have to take that into an account. One of the things that people don't understand about collectibles and antiques, there is an indirect relationship to what antiques and collectibles do on the market in relation to the overall economy and the performance of the stock market. That's true. Meaning, if you were around during 2008 and 2009, during the Great Recession, a lot of collectibles fell in value. I was taking advantage even of buying AFA graded Star Wars figures and CGC graded comic books along with coins and currency during that time frame, and I did very well. Because if somebody had a collection of comic books or Star Wars figures or coins and currency and they overextended themselves, when the economy fell, if they lost their job or if they did something stupid and were one of those people that were out there buying 2 houses when they were only earning $30,000 a year, guess what? They sold into the marketplace comic book collections, AFA graded toys, coins, currency, other collectible assets that were pretty much devalued on the marketplace because more people needed money, okay, and were selling into the market than there were buyers. I was one of the few who were able to scoff up a lot of these deals, okay? That's one of the reasons why Rudy talks about this over at Alpha Investments. He touches on this a little bit, and he has some great stories about this topic as well. If you have money, okay, just sitting, I'm not saying tie up all your money in cash. Please don't do that, okay? Please do not do that. But if you have like $5,000 or $10,000 sitting on the sidelines, when some of these things happen in the greater economy, or if you spot trends, you can take advantage of these particular buying opportunities and you can make a lot of money in the end. And that could be through, buying undervalued securities, like stocks, bonds, or it could be in the greater antiques and collectibles trade, just taking advantage of buying opportunities. Like if somebody comes to you and says, hey, I got this collection of comic books here, I'm going to end up getting divorced. My wife is cheating on me. I know that this stuff could go a lot more if I send it to auction, but I have to give her half. So I really want to screw her in the long run. So any of these books that are worth $1,000, just give me $500 a piece for, and I'll take my $250. I'll throw the $250 at her so she can get out of my life and I can get on with things. Opportunities like that do happen to me, unfortunately, in the trade. And my ethical stance is, dude, you need to take this to an auction house. Okay, I think I brought this example up in another video I did. But a lot of people look at me and they go, dude, I don't want to go through an auction house. I don't want to wait X number of months to get paid or anything. I just want cash right now. I can give her her half. She can go her way because I'm pissed at her. And I can take my money and I can rebuild over here. And she doesn't need to know what I have overall because she's not getting any of it. So it does happen. That's one such example. Okay, I know I'm using kind of a comedic example or a traumatizing example, depending what end of the exchange you're on in that regard. But that's what people need to understand. There is an opportunity cost for everything you buy, everything you speculate in, and everything you invest in. And I don't think too many speculators understand this topic really well, which is why they kind of get really excited over what I consider very low gains while taking a lot of risk. And that's what I don't like. I've said this before, guys. I don't see a valid secondary market 10 to 20 years from now being established for Lego sets like this. There are vintage Lego sets out there that are iconic, okay, in regards to Lego collecting. There are Lego Star Wars sets that are iconic out there in regards to Lego collecting, not in regards to the greater antiques and collectibles trade. I consider Lego to be a toy, and it's a very speculative toy at best. That said, a set like this is never going to be iconic. It's great. If you get this for $25 at Walmart or Target, and you can flip it within a year on Amazon for 50, 60 bucks, hey, you pretty much doubled your money even after Amazon, eBay fees, maybe a little less. But that said, you're in retail arbitrage. You are not operating in the greater antiques and collectibles trade. This is what a lot of people get wrong. And they go on Brick Picker, I think that's the site, isn't that the Lego investing site? And they sit there and think they're God because they went to Walmart, picked a set off the shelf that's for $25 and managed to sell it for 50 bucks. Congratulations, you're not a collectibles guru, okay? That said, you have to also look, though, what you're giving up. That same $25 can go into another antique or collectible or financial market. Let me use this as an example. A lot of you guys are speculating in modern, mass-produced video games. I'll hold up one such example right now. Toe Jam and Earl for the Nintendo Switch, made by Limited Run. Other examples are some of you guys are going out and you're buying 5 or 10 copies of factory-sealed Switch games from Target or Walmart or Amazon. I think this behavior is ridiculous, to be honest, okay? You have to understand, if you're tying your money up for 10 years, okay, when the Switch goes out of production, out of print, okay, and you bought 10 copies of Super Mario Odyssey for 40, let's say you got them on sale, or 50 bucks a piece, you're tying up $500 for 10 years where there's no guaranteed return. Even if the item is discontinued, do you have any idea how many people are speculating on factory sealed video games right now of the modern era? I have a whole video coming out on this topic alone. In my opinion, be very careful. I know people, there's people like me, like I use this game as an example. You want to give me 300 bucks for this game? I'll ship it to you priority mail free of charge. This is a VGA 95 uncirculated item of Super Mario Brothers, the limited edition original Wii release from 2010. I bought cases of this stuff, guys. I know people right now that have factory sealed cases of this game in the hundreds of copies just sitting in a storage unit. I look at that as being completely ridiculous and irresponsible because let's say, okay, I remember you could get these at Toys R Us, okay? I remember Toys R Us did clear these out for like $24.99 a piece at one point. Well, even if you bought 100 copies of this at $24.95 and they're still sitting in a storage unit, you spent over $2,000 on this game alone. It's sitting there doing nothing for you. Do you understand the opportunity cost? Let's go back to the financial markets example. The greater stock market in between the years 1871 and 2015 returned 6.86% per year after inflation, when adjusted for inflation, okay? That's per year. Could you imagine if you would have put the $2,000 in the stock market instead of something like this that you didn't even flip yet? I'm just saying, guys, be very careful. There's a lot that goes in to understanding the financial markets and the greater antiques and collectibles trade. Remember, I'm going to leave you with this endpoint before I end this video. Remember what I said before about sophisticated investors who operate in the greater antiques and collectibles trade. They know economics and they know finance inside out. That's why they're able to take their knowledge of the financial markets, of the real estate market, and apply it to antiques and collectibles. That's what makes them successful. You want to be successful in investing in antiques and collectibles, you got to learn basic economic principles, and you also have to have knowledge of the financial markets, okay? There's a lot of people right now that are doing stupid things. I've spoken about this in depth. I have another video coming out on more ridiculous prices being paid for water-graded video games. You'll see it within a week, okay? That video is one of my top videos on this channel where I talked about the speculative bubble and some of the prices being paid for water-graded video games in this day and age, because we are in a speculative bubble in that particular market. I've warned about this multiple times. Be very careful. If you are unable to properly analyze that market and you are spending, a couple $1,000s here and there on water-graded video games, you better hope more buyers come into the market over the next few years than there are now, okay? Because if that doesn't happen, a lot of people that are paying exorbitant prices for these items now are going to be selling them back into the market, not even 5 years from now. It'll be a year or two from now, as soon as they get their credit card bills. Because most of these people, I know for a fact, are putting this stuff on credit. They're leveraging themselves to buy this stuff because right now, it's the cool thing to do. Look, I got a $9,000 factory sealed copy of Kid Icarus graded by Wada Games. Well, dude, we don't even know how many copies of Kid Icarus are out there still because Wada grading is only a year and a half old. Be careful, guys. The market is nowhere near stable, okay? That said, I want to thank all my long-term subscribers who are subscribing to this channel. I value all your feedback, even if you don't like these videos. If you tell me, Sean, this video that you just did kind of missed the mark or I got lost in it, please leave a comment and let me know so I know not to produce this type of content going forward, okay? I've said this before. I want to create a channel where also you guys have some control over what topics I talk about and what I produce. We are going to get back into antiques and collectibles as a valid asset class. I'm going to finish up the videos on reality television talking about Toy Hunter. And I'm also going to circle back and talk more about Wada Games and the vintage video game marketplace, as well as the modern era video game marketplace. Please join me. If you haven't subscribed to this channel, the best thing you can do is subscribe, because that's what tells me that I should create more content. Okay? I don't really go by likes. I don't go by comments. Why I take everything into account. It's the subscription rate that allows me to justify spending a couple hours talking to you guys, because there's a lot of planning that goes into these videos. I would love to tell you I just turn the camera on and talk. That's really not true. So if you do enjoy my content, please let me know. And if you don't enjoy it, please let me know. Thank you guys, and have a great night.